Forex. It is good to see you here. This is Rob Reinhold. I'm joined by Ankit Sharma, and here we are, the Currency Room. We are 3 weeks away till the end of the year, and then we'll close up 2022 with a big bow, and we'll send it off into the history books, and we'll look forward to 2023. But we still have 3 more weeks left to add to our pip total, so let's get rocking here. Let's cover what happened last week to get us in a good idea of where we're starting the week off. We had a pullback in equities. And we failed to really break out and run above some long-term levels that we talked about last week. And we're going to take a look at that again this week and show you where we are. We're still on the, I said the edge of a cliff, but it's more like, we're going to go right or left. We haven't had a signal yet whether the markets are going to roll over and die here, or if the equity markets are going to actually break through some long-term levels and start to move higher. We did not get that breakout or breakdown this week. And that was our call last week, is that we weren't going to get it this week. Remember, we talked about the CPI next week on Tuesday being the thing that likely answered the question. We did see the yields in the dollar slightly go higher. A big story this week, oil. Boy, oil is lower than it's been all year long. Not just lower than it was before the Ukraine war started. It's hitting December of last year lows. So we're not only below where we were in the war, but we're below where we were at the first of the year. Cryptos, they are very sideways here. We've been very clear on that. I think you just want to wait until you see a trend before you jump into that. As far as economic reports go, first thing we got last week was ISM Services PMI. Now, the market did not like this. So the equity markets did not like this number. We've been saying this for months and months. Right now, good news is bad news and bad news is good news. We had a very strong ISM PMI number, much stronger than expected. What happened Monday? Markets reacted very bad to that, went down. We heard from the RBA. The Aussie really didn't do all that much off of the movement. There just wasn't a lot of movement. We then heard from the Bank of Canada on Wednesday. The CAD has been awful. And I know, Ankit, you're closer to this than me. What did you think about the move in the CAD this week?
I mean, I think this is the thing that everybody's kind of asking, because it's a rare occasion where we get so oversold currency. I mean, if you look at 2022, we have had some crazy movements. I mean, this is again reminding you of the whole yen one-way trade. I mean, this is so one-way that if you look back in time, I mean, we have to go back 2015 or even before that to really see that extreme levels. So this is definitely catching a lot of traders off guard, because as soon as it broke that channel, it's just been one way. So I personally think this is a bit of a mystery here. We have Bank of Canada raised rates this week by 50 basis points. Nothing that really lifted the CAD up. So I would say that I'm in the same camp as everybody else. I don't like it. Whenever you see something that extreme, that's where you get those big reversals. But again, no signs of reversals yet. So I think on the CAD, you just sit on the sideline until you get a bit of a rise in that oversold momentum, because we want to see that pressure kind of alleviate a little bit. But at this point, it's very risky to enter a new position. But if you've been riding that, I mean, this has been an amazing currency like for the entire month of December or November here.
Yeah, and we've had CAD at a -1 or -2 for a while now. It has now gone to a -3. And -3 is when you get those extreme moves, but it's also where you get those extreme reversals. So we'll take a look at the CAD here, and we'll definitely see it at extreme levels. I really want to focus on Friday's price action, because this was not a good number. Now, when you say good news is bad news is good news, I'm not talking about inflation. Inflation, that one's still the same. Bad news is bad news, and good news is good news on inflation. We had a hotter than expected reading on inflation. The markets reacted terribly on Friday, and then they recovered. And one of the things I've always said is that when something goes up on bad news, it's a sign it wants to go up anyway. And so what happened on Friday, I thought we were going to be down at least 2% in equities. The fact that we crawl back and close pretty close to flat down a little bit, it's telling me that bad news is starting to bounce off the market. Now, look, I don't want to get too far forward. We're going to take a look at the charts just like we do, and we're going to make all of our decisions based off of technicals. But when we take a look at what really happened on Friday, I think we have to say that was really bad news that happened on Friday. And the equity market kind of shrugged it off. And even more important, the dollar did not rally on Friday. And we're going to be talking about that specifically. So let's take a look at the numbers real quick. S&P closed down 2.75%. World indices are doing better. We've seen that for about the last month or two. World index is doing much better. Crypto flat. We've said crypto is very uninteresting right now. Gold was flat. Look at oil. That is just absolutely getting crushed. Let's focus in on the charts and where we are. This is the chart we looked at last week, and we talked about this long-term upper trend line that really coincided with the 200-day moving average, this being a very, very key level. And we talked about, us being up here kind of on the cliff, we not really knowing which way the market's going to go. Is the market going to hit this level and plunge to a new low? Or is this the time it's going to break through this level and start to look a little bit better? And we said we don't know yet. I personally thought we were going to stay up in this area. It was weaker than I expected. However, if you take a look at this, we did bounce at support levels. We did hold. Now look, it was an ugly week, but we did hold. We have to say that this market is sideways at the moment. We've hit up against this big resistance level, but we haven't broken down to making lower lows. We still have both moving averages trending higher. There's still more bullishness than bearishness. Once we break this level, once we see the 20 start to turn down, once we see the 50 start to turn down, okay, then we can get more bearish. Until then, we really just have to be neutral. Let's take a look at performance in the cryptos. Performance in the cryptos was pretty flat other than Cardano, and that was weak. But really, very uninteresting. This is a very small move in crypto. A 0.1% move in Bitcoin, that usually took about 2 seconds to accomplish. That was a whole week. We do not like cryptos here, don't think they're interesting at all. We think the Forex market is much better. And take a look at these moves. Now, these are moves that you can play. Look at that yen, down 1.5%. CAD, down 1%. We've loved the Kiwi. The Kiwi was a great performer this week, but it wasn't the best performer. The Swiss franc came out of nowhere and said, hey, you know what? I'm going to be the best this week. Pound, I was actually pretty bullish on pound earlier in the week, and we just high base this week. I still do like the pound on the long side. But as you can see here, the things that we've really been focusing on, which was strong Kiwi, weak CAD, weak yen, and we also have been talking about weak dollar. Pretty much that stayed, except for the dollar got a tiny bit of a boost. At one point this week, the stock markets were down 4% and the dollar was flat. So just like we talked about, when there's bad news and it goes up, this works the same way in reverse. This week should have been a great week for the dollar. Should have been a fantastic week. It wasn't. I still like dollar short. What do you think about that, Cole Onkit?
Yeah, I mean, I would agree. I mean, if I really have to look at the way the textbook is, how things should go up and down, I mean, it's not the same anymore. It's not the same at all. I think that's where really catching some traders off guard or being frustrating right now because things are just not responding the way it's supposed to be. And that's usually always the difficult part of that decision making because, you want to do everything the correct way, but the price action is telling you the opposite. So I think if I really have to not worry about next week, the numbers, if I just look at the cut out the news and just look at the price action, that price action is very weak for the dollar. So I personally think that the markets are doing is one thing, and then based on the currencies are moving, they're kind of showing their own relative strength of weakness, which is what we really have to pay attention to going to next week because we're no longer in the same environment as we were in the past few meetings. I mean, right now, even going back to last meeting, dollar was sitting at a much better level than it is right now. So I think that's something to keep in mind.
Absolutely. And if we take a look at our market outlook here, we were at a +2 and we've had to come down to a +1 because we are now trading right under that 20-day moving average. So we have become less bullish in equities overall. We just looked at the chart. We bounced up against the top end of the line. Here's the interesting thing. When we come over here to the world index, the world index is telling a different story. And this is where the story gets even muddier. If we were just to look at this chart, we would say, oh, wow, we broke out above this trend line. We made a new high and we pulled back and bounced off the trend line. That would be a really early sign of a major reversal in the markets. If we take a look at the world equities, it's kind of telling us, hey, maybe things are going to go higher. If we take a look at the S&P, it's saying maybe things are going lower. This is why we said we don't really like this week of trading, because there was no clear signals here. I think we're going to have a very clear signal at the end of this week. I think the CPI on Monday and we have a Fed meeting on Wednesday. I think that is going to propel us to where on Friday we will definitively be able to say, okay, the next wave of this market is likely higher or the next wave of this market is likely lower. Until those two things happen, we think the waters are very, very muddy here. Take a look at this crypto chart and then just forget about it. There is no reason to be trading in here. There's no reason. There is no movement. It is dead at the moment. We like to trade things that are actually moving. So let's focus in on some important things this next week. This is a very, very, very busy week, and we don't have time to go through everything, but we have four central banks. We've got the Fed on Wednesday. We've got Swiss National Bank on Thursday. We've got Bank of England Thursday, and we have ECB on Thursday. Absolutely crazy. We have a lot of central bank information. And then take a look at all the other things. We have GDP out of the UK. We've got US CPI on Tuesday. We've got CPI out of the UK. Again, you could just go down this. GDP out of New Zealand. This week is full. We didn't really love the trading setup for this last week. We love the trading setup for this week. We think it's going to be a very, very active week. However, we think that week starts on Tuesday morning with the CPI report. It's highly likely that people aren't going to stick their necks out and make big trades before that. We think all the action comes after that. So we like Tuesday to Friday, and I think you can trade all the time zones. I think it's going to be very, very active. So much on the calendar. So let's make sure that if you're trading currencies, let's make sure that you know what's coming. If you're going to be trading Swiss franc, you better know that on Thursday, there could be a big move in Swiss franc. If you're going to be trading the pound, you better be ready on Thursday at 7 a.m. for those big moves. Check the calendar. Make sure you know what's going on with the currencies that you're currently trading. All right, let's take a look at the currencies one by one. Let's focus first on cryptos, and let's really speed through this because, Anka, do you see any reason to trade cryptos here?
I mean, not at all. I don't think the cryptos are really the focus here. I think again, there's a whole lot of other places where the money can go. I don't think the cryptos is really kind of stands out in there where screaming out a buy or screaming out a sell. Like, I'm actually very surprised that crypto hasn't fallen apart after this whole FTX, the collapse. But at this point, yeah, it's I think there's better places to be where you can invest and put money in, put money to work. And I think this is the last place that you really, I mean, we need an extreme, like a risk on environment for cryptos to really rise. But if the market stays pessimist as where we are right now, a lot of people are pessimistic, not just for now. I just want to keep everybody in mind that, we're trying to figure things out for next week. But there's a whole big focus for 2023 as the recession fear looms. I mean, every indicator is pointing out to a recession next year. So, I mean, if you think about it, like it's not the right environment for, the money to pour into cryptos here. So I think there might be some movements here and there, but, the outside of that, the currencies are definitely moving much better compared to that.
Absolutely true. And if someone had a gun to my head and said, hey, Rob, you have to trade cryptos, you have to buy one of them, I'd buy Litecoin. It's the only one that's showing that it's actually moving somewhere. Now, look, it hasn't moved in like a month, but at least it is now trading above the place where FTX came out. Everything else is trading well below that. Litecoin is showing relative strength, so that would have to be my choice if I did choose cryptos. But as Ankit said, the Forex market is looking much more interesting. Now, my trade this last week, and we talked about this in the currency room last week, was I wanted the dollar to bounce, and I wanted to short a dollar bounce. I got exactly what I wanted. On Wednesday, it was a moderate trade. It wasn't a great trade. It wasn't a huge down move like we saw the week before, but it was a decent trade to the downside. I still like dollar lower, but I am not sticking my neck out until I see that CPI report. And that CPI report is going to send the dollar likely up or down 2% very quickly. So I'm going to be looking to enter after the announcement and not get caught up in the craziness. So I still like dollar short. Coming over here to the yen. The yen to me is kind of a tricky one. We had a big down week on the yen, but if you take a look at the daily chart, it was really just a pullback from a new swing high. Looking at the charts, you have to be more bullish than bearish on the yen. The problem is the yen was horrible this week. I don't have a real great call on the yen. Ankit, do you?
I mean, I think if you're looking at yen, you also have to figure out what the dollar is going to do because of that negative correlation. This is the most kind of confusing trade because, we have seen that even just the whole month of December or November post that last, the last CPI release, we saw the huge drop in dollar yen. So if you really look at Aussie yen versus Aussie dollar, Aussie dollar went up 2%, where Aussie yen was stayed where it was or down. So, I mean, if you really look at it, you really are trading this whole dollar yen currency pair. So I personally don't have a strongest call. I think we really have to figure out what the dollar is going to do and just the opposite we expect from the yen. So I don't have a strong call. I think we just have to see what the dollar is going to do. And then based on that, we can make a bit of a presumption what the yen is going to do. So I think last CPI release and the post CPI price action, I would expect something very similar. So that's what I'll be focusing on.
And you're exactly right. And we've talked about this negative dollar yen correlation. It's very, very strong right now, which means this is a very great trade. And look, it could be up or down. Remember, when we say the best trade, what we're talking about is the currency that goes up the most against the currency that goes down the most. That's the best trade you can make. It was the one with the most negative correlation. When we can identify which two currencies have the most negative correlation, it makes for a really good trading vehicle on both sides, going long and short. I agree with you, Ankit. I think dollar yen is a really great play all this next week. Swiss franc, we do have Swiss franc coming up with central bank on Thursday, and you can see Swiss franc has really just parked itself and gone nowhere. Typically, the Swiss National Bank doesn't say anything to cause any waves. If we do get a breakout, we can upgrade this, but as far as right now, for me, Swiss franc is a no trade. Euro, also a no trade, but I've been very clear about Euro for the last 2 months. I've just said, look at this chart, forget about it. Look at this chart, forget about it. And I pointed out all these long upper shadows and lower shadows, how these just will stop everyone out, longs and shorts. Okay, at some point, this will change. At some point, we will break out of this channel. You can see that we're knocking on the door. We're knocking on the door to break out of this channel to the upside. Now look, we've knocked on this door before and it fell back down. I am open to Euro long later in the week. If Euro long can break out and hold, I will look at going long Euro. But until then, it's a 0 and a 1 to me. It's just not interesting. If it does change, we'll absolutely jump on it. Pound was one of my favorite currencies last week, and you can see that the pound just based this week. It just based. So it wasn't as strong as I thought, but look, I love this still. It is still relatively strong. We still have moving averages moving higher. We are breaking out of some key levels here. We're just gathering energy. I like the pound on the long side, but I do need to see velocity. And right now, it does not have any velocity. Once we get a turn up in velocity, I'm ready to go long pound. Until that point, it is on the shelf. And here we are, CAD. Look at CAD. This is what we talk about. When things are trading in these channels, we don't want to be trading. CAD was in a channel for months and months and months, all the way back to the summer. The longer they're in a channel, the more this spring coils and gathers energy to when it finally does break out, the moves can be very, very strong. You can see right here, we're at a -3. Now, what -3s mean is it's the best time to be short, but we're getting closer to some sort of bottom. It's going to happen somewhere. We just don't know where it is. If you're going to trade CAD, you got to trade it short. But I think you have to be reasonable on we could be very close to a bottom. So just follow your position management. If it keeps going lower, ride it lower. Use your position management. If it does start to bounce up, cut and run. I think you can play it short until it reaches a bottom. No one knows where that bottom is. Anyone who tried to guess that bottom is dead. Anyone who tried to guess the bottom died on this trade. So do not try to guess a bottom on this trade. It's a one-way trade at the moment, short only, but you better be ready to cut the cord on it because we are at very extreme levels on CAD. Coming over here to Aussie. Aussie is, for me, I haven't traded Aussie for a while now. It's just been stuck in this range. It's a decent range. You can trade this range from the low to the bottom. As you can see here, we're headed off the lows. We're in the middle of the range, approaching the top. You could trade it if you wanted to. We've got a nice +2 on velocity at the moment. But for me, this is no more than a range-bound trade. What's your call on Aussie here, Ankit?
That's another kind of piece of the puzzle here. Just like how you're seeing that negative divergence between the dollar and the yen, I think Aussie and Kiwi is kind of in the same boat here. I think as long as the Kiwi stays strong, the Aussie is going to stay muted. I mean, this is the first week where I think we noticed a bit of a slowdown in the Aussie Kiwi slide, but you can see like how negatively diverged they are. So there's actually two divergences taking place, Aussie Kiwi and dollar yen. There have been times where, we get that divergence between euros versus franc, but we don't have that. So I think if you look at this, the Kiwi has been the place. And because of that, Aussie is not really catching any sort of bid. For that to kind of change, we need to see Kiwi come down, and maybe that would, cause the Aussie to maybe go higher. So you had to really pay attention to Aussie Kiwi here. But again, I would say I can write an essay about why Aussie should have been stronger with all the China reopening trade and the emerging market being strong. But again, I think we're seeing a very opposite picture here. So we'll have to wait and see what happens. I mean, just like how we talked about the CAD being very oversold, we have Kiwi, on the other hand, being very, very overbought. So there's two extreme readings that we're having. So I personally think that eventually these two will crack, and the money will then redistribute to other places. Like we'll start to see Aussie do better than the Kiwi, and maybe we'll do some CAD will do better than something else. But right now, that's where the strong forces are kind of moving.
Yeah, I totally agree. At some point, these trades are going to crack. But just like with the CAD, anyone who tried to call a top on Kiwi is dead. They're dead. They died. They said, oh, it's gone up so much, I'm going to short it. They're dead. They're dead. This is a one-way trade. You can only be long Kiwi. But same like being short the CAD, you have to understand you're potentially at a major reversal point. So all the trades need to be very, very dialed in. You can be long Kiwi. When it turns against you, you better cut the cord. You better cut and run because this thing is prime at extreme levels for a big reversal. If we take a look at where we stack everything up, here are the major trends happening. We've got Kiwi at a +3, got CAD at a -3. Now, whenever we get to -3s, these are where you get the strongest movements, but also the most likelihood for reversals. The best trade at the moment is long Kiwi CAD, but that is likely going to reverse. We don't know when. It could reverse in 3 weeks. It could be reversed in 3 hours. We have no idea. Now, if you say, okay, I don't want to play with that craziness, that's great. let's just go in to the +2 stuff. And really, it's two pairs, pound dollar and dollar yen. Now, again, these are the major trends going on right now. If we take a look a little bit closer on a shorter term chart, we look at velocity. What's moving right here, right now? Right here, right now, there's really one trade going on, and that is short CAD, long Kiwi. And you could take a look at the Aussie. It is a +2. I like pound, but as I said earlier, I need the pound to show me that it's going to do something. I like dollar short, but right now, it's at a -1. I need these things to show me that they're going to strengthen a little bit more on the velocity before I jump into them. Now look, I am on hold until Tuesday morning anyway. I am not looking to make any trades on Sunday or Monday because I think that's just running out into a street to try to grab a couple nickels and dimes when you could just literally wait and get a $100 bill. Because what happens is if you're trying to get the nickels and dimes, sometimes you might get stuck. Sometimes you might get hit. Sometimes you might, be too scared to run out to get the $100 bill because you ran out to try to get the dime and you broke even. But you almost got killed and run over. All of a sudden, the next time you go out there, you have hesitation when the big money's there. I think it's best to just sit on the sideline and wait for Tuesday morning CPI. Let the big crazy volatility happen, maybe at 8:35 Eastern Time, 8:40 Eastern Time. Then you start to say, okay, I'm ready to play. Let's take a look at everything. So starting the week off, Kiwi pound long, dollar CAD short. Let's go ahead and take a look at those. Now, I'm not going to spend a ton of time looking over trades for Sunday, Monday because I don't want to encourage anyone to go out and trade on Sunday, Monday. What I'd like to encourage you to do is to sit on your hands Sunday, Monday, and come to play Tuesday morning. First currency pair I want to focus on is dollar yen. Dollar yen is where the most negative correlation is and likely where we're going to see the largest move. Now, especially if the CPI comes out as expected or lower than expected. This is the play I like the most. As you can see here on the chart, we just had a bounce off the bottom. It's a really nice little bear rally on a daily chart. The problem is, take a look, we don't have a ton of velocity here. And that's what I'm waiting for. That I've got the bounce off the bottom that I wanted to see, but when I go into like a 4-hour chart, you can see it's really just sideways here. I mean, it's a very, very mild move lower at the moment. This is not the kind of trade I want to get in. I want to trade in these moves. These are the trades where it's really nice because you don't get chopped out, you don't get stopped out, and you can set up a trailing stop, and when it bounces, you're out and you make a big chunk of money. And then on the other side, on the bounce, these are the moves I want to trade. These are very easy trades. They don't put pressure on you. They don't trigger your stops. Everything in here has been a mess. Everything in here has been very messy and triggered stops. Even though you may have been right, you might have been stopped out on a little run up here. I want to wait until I'm seeing some better candles, and I don't think we're going to see that until Tuesday. I like dollar yen, but I have no way of forecasting where we're going to be on Tuesday when the CPI comes out. You just have to look at it on Tuesday morning. Ankit, what do you want to take a look at? And I think I already know. You want to take a look at Aussie Kiwi.
Hey, I think as we take a look at charts, and I want to just kind of show, if you want to pull up the velocity chart, Rob. I think that's the most commonly asked questions that I had this week. The first thing, why something is so oversold, and secondly, how do you know when that thing is turning? And I think if you take a look at it, you can kind of see that when the turns will happen, where we start to get a higher high and a higher low. And so far, you can see we are just getting a lower high and a lower low. So if you look at the chart here, Aussie Kiwi, we got a little bounce, but then it looks very similar to what we look at dollar yen. It's just making a little flagging pattern here. But if you look at it on a daily, weekly, I mean, there's no doubt that we are in the most oversold levels. And if you really look back in history, these are the levels where things turn around. No doubt about that. But that's just a waiting game because you don't know exactly when that would happen. But for that, again, you can use a 4-hour chart. and I really try to do a top-down analysis and see when things just start to turn. I might just like to wait till a 4-hour chart to see that thing turn before it turns into a daily. But Rob, if you want to pull up Kiwi CAD, very similar chart, two extreme overbought and oversold levels. And I just want to show that these are rare occurrences. I mean, it's not very often that I can come on and talk about these things happening. This is a very rare occasion, but look at where we were just in the middle of September, October. I remember we were looking at this trade a lot at that time, but never thought that it would run, 77 to 80. That's 1,000 to 1,100 pips on on this kind of currency pair. That's a massive 10% move in this one. So there's no doubt that things are overbought and things are looking very stretched. But these are the times where, like Rob said earlier, you try to call that top. It's a very tough game because you don't know when that's going to come. I think once this start to unravel, there will be a good trade, but we might have to miss out the first 1%, first 1.5%. But right now, I think it's I could have made the same call last week, a week before that. This is a 9-week rally. So just keep in mind that these are rarely when these things happen, but when they do, you just have to use that extreme caution. Like right now, we're not looking at, this is extreme levels that that things get pushed out to. So when they snap back very fast as well. So trying to open a new trade in these ones, not a good idea. Trying to look for a reversal right now, not a good idea. I think that's where I am at. Like I'm more on the sidelines here because the things that are moving are so overstretched, and then there's certain other things that are not moving, and I'm not really interested in them. So I think that really sum it up based on what we're seeing in the markets. So I wish I had more insight here, but I think as we go into next week, we'll have better clarity.
It sounds like we're both on hold until that big report on Tuesday morning. And then again, you have to look at your trades, look at the charts, and make reactions to what's happening. Trade the market in front of you, not the market you want it to be, not the trades you think should be doing something. You want to get on the trades that are actually doing something. I think dollar yen is a safe bet with the negative correlation. And there's some other currency you could take a look at, but I think everything starts on Tuesday. I think you have to come in with a blank slate and just react to what's happening. I think by the end of next week, we will have a much clearer point about this equity market. Is that the end of this wave higher and we're about to go back down and at least retest lows or set new lows? Or does this market want to actually go higher? We'll see. We'll have a very good idea by the end of this week after all of the action. Be active this week, but not until Tuesday. This is one of those weeks where you do want to be more active. Most of the weeks, I am sitting here saying, don't be too active. Don't overtrade. Don't do this. This is not that week. This week is the week to be active. There are pips to be had out there. Let's be cautious, but let's go get them. Thanks for joining me, everyone. Take care. Have a great weekend. Goodbye.